What's up, traders? What's up, tycoons? Super excited for today's video. The market zigzags down. Then, after the Euro session closes, we see a rally just to give it all up for a strong sour hour in the market today. We also have TLT. Is the bottom in, or is this just a dead cat bounce? We're also going to take a look at where money has been rotating as we've seen some of the big tech names really start to fall, such as Microsoft, Meta, and also Apple, Amazon, and where the money could really be flowing into. So lots to break down in today's video. Be sure to smash that like button, subscribe to the channel if you guys are new. Today's video is sponsored by Simply Wall Street. It's a really amazing platform that I've used for a while. You guys can get a 14-day free trial using the link in the description below. And for the people that want to join and purchase the annual plan, you will get up to 40% off. That makes it very affordable, okay? Less than $200 a year. I highly recommend them. Now, let's get into today's video. Before we dive right into the technical analysis, there's some important stuff that I want to show you guys. So the first thing we're going to highlight here is just some simple seasonality. And you can see that the first 8 trading days of the year, typically, or of the month of August, are not that great. Okay, what we're looking for is these dotted lines here. These are all of the pre-election year data, and you can see that the first 8 trading days typically are red, right? And we see a significant pullback, and then we start to rebound a little bit later. Now it's August 9th, the time of this recording. Remember that these are trading days, not actual calendar days. Okay, so we still have a little bit to complete, and you can see some of these actually bottomed just a little bit before. Now, CPI is coming out soon. If CPI comes in good, that could be the catalyst that we need to actually drive us a little bit higher here. So we'll have to pay attention to that. But what I want to go over is really where some of the money is flowing into, right? You can take a look at tech versus the S&P, and you can see here that there was this divergence in this area, and we've really seen tech start to collapse, right? When this is going down, this means that tech is underperforming the S&P 500. This is XLK versus XLE. This is technology versus energy. And you can see that this is hitting new multi-month lows and continuing to drop down lower, meaning that technology is underperforming energy, right? When this goes up, it means that technology is outperforming energy. And this is energy versus the large cap growth. This is XLE versus IWF. So when this goes up, this means that energy is outperforming large cap growth. And you can see we had this positive divergence here as price was going lower on this ratio chart, and the RSI was going up higher. Appears to be putting in a nice rounded bottom. And it seems energy is one sector where, a lot of the money is going into right now. We have crude oil futures right here, and you can see crude oil futures pretty much have just been trading in this bullish channel right here, almost in a straight line up, right? Really just, very controlled buying, very algorithmic, just systematically going up. And each time we come back to the 5-day moving average, that's this blue line, you can see we get a bounce. If we break below it, we don't even make it to our middle Bollinger Band, which is going to be your 20 moving average. So lots and lots of strength. Any dips below the 5-day moving average are immediately bought up and pushed up higher. And we're really just trading in between that 5-day moving average in our upper Bollinger Band. Today, you can see we are at that upper Bollinger Band. So it would make sense if crude oil does start to pull back and we start to see oil prices pull back. But it doesn't have to mean that it's going to have a significant move. Even if it does, crude oil, okay, can come down to the $80 price level and still be right there at that middle Bollinger Band, healthy retracement territory for a little mean reversion to potentially continue rallying upwards, right? Notice how we had these lower lows here, but we were actually getting higher lows on the RSI. That's a simple term known as bullish divergence. Right here, we can see that the RSI is tapping back up into that overbought territory. The MACD is very close to rolling over. So that could be a topping signal if we do start to see the MACD roll over here, right? You can see last time we got a MACD crossover. At this point, it was met with a significant move to the downside. So you do want to pay attention to that. But energy has been where a lot of this money has been going into, that's been coming out of this large cap growth, large cap tech. This is Oxy right here, ticker symbol OXY. We're actually in this one in the Discord and did really good. All right, we have one of my favorite patterns here known as the inverse bump and run pattern, indicated by these two trend lines. All right, you can see we've started our bullish channel to the upside here. We actually broke out above the top trend line and came back and retested it as support today. It's going to be really important to see if the bulls can continue driving price higher and staying up within this middle Bollinger Band here. All right, so Oxy is definitely one that I've been looking at. Remember, Buffett has been buying this thing up in the 60s All right, that's where he's been getting in at, is in those $60 price levels, and just buying in at the 60s. And I went over it recently in a video, but when you zoom out to the macro, it definitely looks like Oxy has a lot of room to the upside. It just may take a few years, right? We know Warren Buffett is a very patient investor, and he just looks to buy really good companies. Now, this is stocks versus commodities. So this is the SPX versus the CRB. And when this is going down, you can see that this peaked back in 2019. When this is going down, this means that the S&P is actually underperforming commodities. And we've got this multi-year DTL, and you can see we rejected that again. And so it seems like, again, commodities, which energy is a commodity, is one area where a lot of this money is flowing into, that's flowing out of big cap tech at the moment. Now, we've got this report here from the desk of Ian Cully saying, are you ready to rotate into cyclicals? It's commodities over bonds, right? And I think that that's definitely been evident. In fact, we're now in an everything over bonds environment as rates continue to rise. And if you're looking for an uptrend, just place US Treasury bonds or the Japanese yen in the denominator, and voila. I consider the commodity versus bonds ratio one of, if not the most important, high level intermarket ratio in our deck. Why? Because it reveals the inflationary backdrop that colors the entire market, determining secular leadership between asset classes in US stocks. And it's hinting at the next trend in relative strength. Check out the commodity versus bond ratio as measured by the relationship between the CRB index and the 30-year Treasury bond futures. Now, the 30-year Treasury is actually the one that Bill Ackman just went short. But you take a look here at the commodities versus bond chart, and we just had a massive, massive breakout, right? This is back all the way from 08, and you see it's breaking out. It's very close to testing this level again. And if we can, we could see a strong push up and just indicate, further bullishness in the commodities versus bonds ratio. I mean, this basically looks like a giant bull flag right here setting up. We do have room to consolidate more and get some more, compression before the next expansion, potentially to the upside. So if you notice that the ratio peaked in 2008 during the global financial crisis and turned lower until the pandemic sell-off of 2020, disinflation defined that decade as interest rates fell and growth over value became a rule of thumb. That former trend of bonds over commodities no longer exists. Instead, commodities have turned the table, violating a decade-plus downtrend line relative to bonds. Commodities, energy in particular, have now joined the conversation after more than a decade of sitting on the sidelines. You fast forward today, and this crucial ratio looks poised to rip higher after almost 18 months of consolidation. An upside resolution favors a stock market rotation down the cap scale into cyclical sectors. This is a rotation that's already underway. No wonder I keep finding energy names I want to buy. I expect that list to grow, encompassing financials, industrials, and materials if commodities embark on a fresh leg higher relative to bonds. Now, they talked about industrials there. I really like industrials a lot as well. Just the XLI, the DIA. Okay, Dow Jones Industrial, you can take a look at those charts, and they've been performing really, really well. Another one that I like is healthcare, okay, XLV. Those are some, I think that, once you start to see big cap and money flow out of big cap tech, okay, I definitely think that energy, industrials, and healthcare are some sectors to potentially look at for that market rotation. Not saying that it has to happen to all of them or to every single one of them at once, but those are areas that I've been looking to whenever I see tech start to pull back. Now, this is the Palladium futures right here. Okay, so going on another commodity, and this is looking good to me. Okay, if you take a look, we've got a rounded bottom, we've got some bullish divergence forming here. Let's actually head into trading view and go over some charts. So we're over here on the Palladium futures chart right now on TradingView. And if you've made it this far, please smash that like button, subscribe to the channel so you guys don't miss any of the videos. And if you like these charts, subscribe to my newsletter, okay? I'm putting really good content out in the newsletter. It's a completely free newsletter, and I'm also giving free trade setups and trade ideas on different stocks and sectors that I'm watching in that newsletter. So you're going to want to subscribe to it. It's completely free. There's a link in the comment section or in the description down below. Let's go ahead and get into it. So as I mentioned, we have a rounded bottom forming here, potentially a double bottom too, if you want to call it. We have bullish divergence right here on our RSI, making these higher lows, building relative strength as price action is really just squeezing right here. If we throw in our Bollinger Bands, You can see we also dipped outside of the bottom Bollinger Bands. And the last time this happened, you see we moved sideways and then we got a nice little push upwards. So this time, if we can get a push upwards, what we really need to do is get above our 5-day moving average. Okay. You can see the 5 SMA aligns here perfectly with a 23.6% retracement at 1242.5. Above there, we have this trend line. And if we can break through this trend line, we have 1277.5. We have our upper Bollinger Band here at 1314.5. Then we've got resistance at 1334.5 and 1375.5. So I do think that it's very possible we could potentially see some type of move, something like this, okay, where we come like this and potentially come up to some of these higher price levels here on the Palladium futures. So this is definitely one that I would pay attention to, right? Now, if this wants to break our most recent lows here, okay. I do have some price targets to the downside we can go over. That's going to be about 1178.5. All right. Then we have 1138.5, and then we have 1087.5. So it's not all roses. We haven't got confirmation of a breakout, but this is definitely something that I'm looking at for a potential breakout. And again, this is another commodity right here, Palladium. When you take a look at the positioning there, we're seeing a lot of bullish bets on Palladium and Palladium futures. Now, let's go ahead and take a look back at Oxy real quick. Okay, and go over Oxy. All right, you can see here we traded outside of the top Bollinger Band, got that compression back down to the 5-day moving average. We got outside of the Bollinger Bands again here today, and we're starting to gravitate back towards that 5-day moving average. 63.37 is going to be a strong support level now after being prior resistance. We're going to look to see if we can potentially hold that on Oxy and continue trading upwards in this bullish channel. If we don't, it's not the end of the world for energy, okay? And it's not the end of the world for Oxy. You can see that our middle Bollinger Band actually aligns up perfectly here with 61.96. So that's going to be a big support level. We'll see if we end up coming down and tapping that support or trading sideways and going back up higher. Now, let's go ahead and talk about TLT. Okay, we got to talk about TLT, obviously, and TLT's been bleeding, guys, right? If we zoom out and go in on a little bit of a macro, and we'll take these off real quick, just to make the chart a little bit clearer. We had this structure for a long time, okay? If you've been watching the channel, we talked about this structure squeezing for so long, right? Really since October of last year. So, large compression here, and eventually this was going to see a strong breakout to the upside or to the downside, and we got a very textbook breakdown, retest, push lower. I've been calling for this gap to fill on TLT at 95, and I did actually buy TLT once we came down here to the support. I got in under 95. So those long positions, they are doing nice. I also bought TMF at the same exact time. I just trimmed TMF, just to get a little bit less risk. And I do have some put hedges to the downside. All right. The thing you want to be cautious of is what if this is all a dead cat bounce, right? There's been such a dramatic move to the downside that it makes sense that we would get some type of a bounce, especially after testing a key support level. So you do want to be very, very mindful of that. Now, one thing that I would note is we had this, structure forming here on the RSI, and this could be bullish, right? We had to look below and fail, and we could head towards the upper end of the range here, which would continue pushing TLT higher. You can see we've got a gap here to fill and a gap here to fill. So 2 gaps up to fill with 1 gap down now, right? So we do have a small gap down. Keep in mind, guys, that these gaps, they tend to fill about 90% of the time. The big question is when, right? And so this gap here, this is all the way from November of 2022. And I was waiting really to get long-term positions, not like short-term trades, long-term positions until we filled this gap. And we finally did, right? So it took months and months and months, almost a full year for that gap to fill. So, we could continue trading higher and fill these gaps first, or we may just completely avoid these gaps and come down and fill this gap and really start to range and go sideways. The big levels that I'm watching right now is 96.65, 96.53. Those are going to be support, right? So, if we end up getting a pullback, these are going to be the areas to look for potential support before filling that gap, right? If we break these two support levels, then it's very likely we're going to end up filling this gap, right? But if we can stay above there, you can see we're above our anchored VWAPs right here. If we can stay above there, then the likelihood increases of filling our first gap up, which is really going to be at about $98, just shy of $98 at 97.92, with a strong resistance here at 97.77. If we break above that gap, we have 98.15. That's going to be a resistance level now. And then we have our next gap up to about 99.6, okay? And above 99.6, we have resistance at 99.76. These are going to be all of the relevant levels right here, pretty much for the next week or to finish out the rest of this week. We're definitely going to stay within this range here. If CPI comes in hot tomorrow, guys, you're going to see TLT drop like a rock, right? You're going to see, a significant move to the downside. And if it comes in favorable, we really could fill, this next gap up here very, very soon. So there's definitely going to be some trade opportunities. Just make sure you're on the right side of the trade. And TLT's already done a good job of rebounding, right? We saw a massive overreaction off of the Fitch downgrade, right? If we take a look at TNX, the 10-year treasury, we're getting a classic look above and fail at the moment, right? So, we had this longer term trend line here, and it appeared that the 10-year treasury was breaking out. And what we're seeing now is we're seeing actually this pullback, right? So rather than getting a breakout retest and push higher, because essentially right here, this is the moment for bulls to actually show that they're in control, right? We're speaking of 10-year treasury bulls, TNX bulls, okay? That's the moment for bulls to take advantage of the opportunity and get the breakout retest and push up higher and hit some of those other bullish price targets we had to the upside. Rather, we did not do that. And what we did was a look above and fail, right? So, we came up and we came down. This is actually a bearish signal, and it shows you that bears are the ones who are in control at this level. Now, we do need to keep in mind that the TNX has a very small gap up to fill. TLT has a very small gap down to fill. So it would make a lot of sense for us to come up and fill this gap at least. And if TNX goes up, then generally you're going to see TLT go down. Right. That's just how, bonds work, right? If you see the yields go up, then that means the bond prices, they're going to go down. Very, very simple. So keep in mind now that's right here at our trend line retest. So if we come up, retest this trend line, fill that gap and start heading back down again, that's going to be a really, really interesting development. And that could signal a short-term top in the treasuries and things like TNX. And we could start to see TLT really start to rally. So that's definitely something I'll pay attention to. If we look at the Nasdaq today, okay, and go to over here towards NDX, and we'll zoom into a smaller time frame today and really just dive into today's price action. All right, you can see we're pretty much trading in this selling structure, right? I mean, it's kind of clear, okay? I don't know if it's too clear to the untrained eye, but we're basically just getting some controlled selling right here, right? Just putting in these selling channels, heading lower. All right, initially we had and we do still have it a little bit at the moment, but we kind of have this inverse bump and run pattern here forming. So I'm definitely going to be paying attention. If CPI comes in very favorable, it's very possible we could see a significant rally back in tech. Okay, now we've given up a lot. Okay, we went from almost 16,000 here on the NDX all the way down to about 15,000. So we had a significant, almost 1,000-point drop move, really about 800 points. And it would make sense for us to start getting bounces, right? You can see that each time we've had a significant drop, we've had a decent rebound afterwards. Okay, and we've been respecting the levels really well. Some things that you guys can use to start helping, give you guys an edge, is definitely going to be the Bollinger Bands, right? And it's just a simple, indicator. I've got some free tutorial videos on it. But you see when we start trading outside of these Bollinger Bands, the way markets work is, and the way these Bollinger Bands work is price action is going to snap back within these Bollinger Bands. And you can see that we did that early this morning. All right. And, we ended up snapping back inside of there. And then today, again, we have the dramatic move to the downside, and then we snap back in here towards these Bollinger Bands. And, these are basically just liquidity grabs, right? Come down to support. Okay. And then everybody gets stopped out here who's trying to go long, and they miss the actual rally back up from 15,129 all the way up to 15,204, but not us. Okay. We actually did a really good job in the Discord. And one thing that I want to mention is that trading when the euro market closes, we've pretty much been seeing some volatility every day after 11:30, right? And that's a really interesting time to start looking for some entry opportunities. After 11:30, the euro market closes, and then we keep getting these rallies midday, right? Now, today's rally was sold off very hard. Same thing here. We were mentioning a liquidity grab where everyone trying to go long at this level. Specifically, they got stopped out, and then that provided the liquidity outside of our Bollinger Bands to actually move it back up to that price level. And now everyone who's trying to go short here at 15,204, they're getting stopped out on the next candle because it's going up. And then we actually get the move back down yet again. So, have to be able to understand market structure and be able to read the price action, read the candles, take a look at all the gaps up we have to fill. We have a gap up here, we have another gap up here on the NDX. So if this inflation port comes in good, it really could be a catalyst to drive the market back up. And if it's not, I think that the market could really be in trouble, right? Let's take a look at SPX, and you can see that it's sitting right in between two gaps, okay? Here this week, we've already filled our first gap down that we had to fill, and now we've got a gap up here, and we've got a gap down here. Now, these gaps, they can act as support and resistance sometimes as well. You can see we came down here, tried to come into the gap fill, but we actually held support on the hourly at the 61.8% retracement level, formed a reversal candlestick, and had a nice push up here to our 50% retracement at 44.9575 on the futures, or not on the futures, but on the SPX. And then we rejected there and actually headed back down lower. If the S&P breaks this 44.69 level, 44.50 is really going to be the key level, and that's right at the bottom range of our gap down. If we break 44.50, I think it's very possible that the S&P heads down to 4,400, but more specifically, basically 4383.97. Okay, that's going to be our previous highs over here on our breakout, right? You see we had the previous highs here. We had the initial highs for that started our wave 4, our wave 5 push up was right over here. And once we flipped that area to support here and here, that's when the market completed that wave 5 up and hit the targets up here of 45.98. And once we came up to that 4,600 level, we're expecting this type of correction to the downside. Now, if I just zoom out and go to a 4-hour chart a little bit, and we'll take some of these drawings off and indicators, essentially what we're expecting here after completing a 5-wave structure is going to be an ABC movement, an ABC correction. So, essentially we'd look for something like this. We look for A down, B up, and then C down right here, okay? And that would, again, take us to that 4,400/4384 level on the S&P 500 on the SPX. We'll have to see if that plays out, but that's just definitely a possible scenario that I'm looking at and looking to see and keeping it in the back of my mind. Now, hopefully you guys enjoyed today's video. If you did, smash that like button, subscribe to the channel for more. Don't forget to sign up for the free newsletter, right? It's completely free, putting out some good content for you guys. And I'm also going to give out free trade ideas so that way you guys can catch something, in case you can't watch the YouTube videos every day. You'll get those straight to your inbox. Feel free to share that with someone that you think may be interested. Feel free to share the channel with someone that you think may be interested. And also feel free to check out today's sponsor, Simply Wall Street. It's a really good platform, guys. I'm telling you, you're not going to be disappointed. You got nothing to lose with that 14-day free trial. So I definitely recommend giving it a shot and seeing if it's something that you would like to use.